Good evening and welcome to the Jon Sanchez Show here on News Talk 780 KOH. This is Jason Gaunt. I will be your humble co-host tonight, but lucky enough to be joined by these two handsome gentlemen. Jump on YouTube if you want to see them, right? You're missing out. You're missing out. I've got Dwight Millard with me. Dwight, how you doing, my friend?
I'm doing fantastic, Jason. How are you doing?
I am living the dream, as always. And Cory Edge, how you doing, Cory? Good?
Doing awesome, buddy. How are you?
Good. So you have some data for us, right?
All kinds of data. This will be interesting data because we usually go month by month, which is always fun. But now we'll get to go year by year to compare 25 to 24. And then I don't know if you caught it, but one of those reports, we'll go over it. It compares 25 to 2024 and 2016. So we'll get to see where we've come in the last 8 or 9 years.
And this is the Reno Sparks real estate market report?
Yeah, so this comes from our multiple listing service. This is Washoe County only, Reno Sparks, and just stick-built homes, so no condominiums.
Love it. This is one of my favorite shows. I like talking about these. You know me, you get a chart in front of my face and I get all giddy.
Well, some of these are, they certainly don't rival the returns you and John get in your crazy market. But for housing, it's pretty, some people might not be surprised. I was a little surprised going, wow, 2016 to where we're at now, that's quite a market.
That's crazy. The percentage is interesting for sure.
Yeah, yep.
Well, speaking of percentages, we got a little negative percentages today. Not even a percentage, actually, less than a percentage, a point-something percentage. But the Dow was your lagger today. We had financial earnings kick off. We had JP Morgan release today, which were not the most excitable of results. However, Jamie Dimon wasn't as much of a boo bear as he typically is, saying both on his call as well as the data from the CFO stating that the consumer by and large looks good. There's nothing in there data that looks like they're slowing or they're concerned about the economy, which normally is a good thing, certainly to hear out of someone who has as much data on the credit card side as JP Morgan Chase does. You had that coupled with the fact that financials have done as well as they have for the last 6 to 9 months, as people were buying into the economy that we're in now. And the other part was the hangover effect of President Trump making comments about capping credit card rates at 10%, for 1 year. Another one of those things like the Social Security tax cuts that are just 3 years long. So it makes our job nice and interesting as far as planning in pockets. The Dow was your lagger today. And the reason I pointed those out, and this is why, is because of financials. It's a big part of the Dow. Dow was down 398 points, or 0.80%, to 49,191. S&P was only down 13 points, 0.19%. Diversification, baby. That is 69.63. The NASDAQ was down 24 points, 0.1%, barely moving, 23,709. Gold finally did finish in the red. It was up earlier this morning, up $20 or 0.5% to 45.94. Oil. One would have thought this was going lower, but it continues to go higher, up 2.6% to 61.09. Yes, Venezuela helps, but the concerns around Iran and some additional comments around more targeted Iranian rhetoric, given all the things that are going on, I think has oil markets spooked. Near term, they were bouncing off their lows and technically up through the $60 level this close. If we continue to see momentum, I've seen some charts that get us up into the 70s just from a short covering and or chasing phenomenon. So at least just setting the table overall market-wise. Outside of that, other than Trump data points, there weren't a lot of company data points. The other one I would say was Delta Airlines. The front of the cabin's paying for the back of the cabin. I think they were up 10% quarter over quarter as far as revenue growth just in business class and first, while the back of the cabin was down 10% in terms of cost and pricing. So you can see that K-shaped economy that everyone talked about. And certainly Cory inside of here, the K-shaped economy is part of the Reno Sparks report as well, given the data and what average home prices are in this area, right?
Yeah, it's obviously the high end through most of these things always kind of holds strong. People aren't as dependent on interest rates. Their qualifications aren't as bad. We'll dig into it. Dwight can lend us some light on what he's seeing. And some of these numbers, again, 24 to 25, 2024 to 2025 numbers, they're a little surprising, not too surprising, but it's very interesting how tight these last 2 years have been. I mean, basically mirror images of each other, which for a buyer, well, I don't know. For a buyer, it's not the greatest thing because your prices aren't coming back. And for a seller, maybe it's not the greatest thing either because you want that 10, 20% appreciation every year that we've come accustomed to.
And like we mentioned on our last show, was that Thursday? But touching on that, lower rates could just bring out more supply, right? Not necessarily create this whole massive flux of new buyers. Just probably could pull some people off the sidelines, which may or may not change the dynamic of buyer versus seller market right now.
Yeah, and it may not. It would be interesting if you had lower rates, had a hit to the supply where people come in, then you see prices go lower, what the sellers would do, because it'd be good for the buyers. Sellers may choose to sit tight if they can't get, people are funny. If they can't get the number that's in their brain, they just won't sell, even if they continue to watch the market go down, and even if they have to move within the next 12 months. They're stubborn. I'm sure you see it in, maybe not your clients because they're so well educated, but people in your world that say, no, I'm not going to sell Apple for that because it'll come back at some point, and maybe it does, maybe it doesn't.
And Dwight, you made a comment earlier. Rates ticked up a little bit today, no?
Yeah. You gotta. It was just I think that, like you were talking about, the instability, but you also throw in the Jerome Powell saga, right? I mean, we're in unprecedented territory trying to force somebody out. But what's interesting, and Cory may be seeing this, I'm seeing a lot more foot traffic. There's a lot more movement out there. But what's interesting, and Cory mentioned this several years ago, it's all about the payment. So now people are going in going, here's what I want my payment. If you can make it work, I'll buy, right? And so it's I want a $500,000 house and I want a $2,500 payment. Well, it comes with rate buy downs, putting more money down, etc. But that's kind of I don't know, Cory, if you're seeing that out there, but that's kind of what I'm seeing right now. People are just going, here's the payment, I'll move on. If you get me this payment, I'll move.
I think that's true in housing. I think it's true in cars. I think it's true in everything. The average car price, I can't remember what Phil LeBeau said today, but it was the highest of all time, but they've stretched their payments out to 7 or 8 years. So the payment didn't change much. And same thing with houses. And be careful what you wish for, because Jason, it's better than anybody. If you want a $500,000, $600,000, $700,000 house, but you want a $2,500 a month payment, Wall Street will figure out a way to make that work.
Right.
It may not work at the end, but it'll work in the beginning.
For now,
so be careful.
Yeah, that number, it's the first time that average car prices are north of $50,000. $50,080. And again, this is backdated data, but yeah, it's pretty crazy. All the input costs that go into it, and that's average. There's some cheap ones, there's some expensive ones, but it is not cheap to make that purchase. And the tough part with a car versus a house is historically a car is an appreciating asset, right? So the last thing you want to do is stretch payments on something that's going down. I always say that. On a house, I can get my head around that. But I want to pay on this thing for 15 years, my car. So when I make that last payment, it's worth zero. It's not a very good investment.
But that's what the interesting part is, that the consumer has gotten trained, I guess, to negotiate that way. Hey, if this payment fits in my budget, I'll find a way. And they've just transferred that mentality, that car buying mentality, over to houses. And it's just interesting because they have no concept of taxes and insurance and PMI and HOAs and all that stuff. That target gets further and further away and harder to get. But at least it's a start. People are out there moving around.
Yeah, with I think too many people, you get that Bernoulli utility, right? Where I'm buying this thing because it makes me feel a certain way. It's not necessarily, you're not buying a new truck because you're thinking about all of the investment process logically, right? Ironically, you'd probably be buying something that it just had a rebuild motor in it and all that sort of stuff that you're going to get a long-term cost on, but someone else has driven the depreciation off of it. I was talking to a friend this weekend who is in the insurance business, and they always joke about they can always tell when certain folks in the services industry or firefighters or whenever someone got a new job or a new raise because there's a new truck. It's just like people view them as status. And that's the harder part with a lot of those things, is if you can reduce the price of your status purchase, people seem willing to do it. Unfortunately, we're irrational at times.
Yeah, absolutely.
Keeping up with the Joneses, right?
Yeah, the Joneses are hard.
They are hard.
They're always going to be there. Yeah. And I think we all do some part of it. And, I mean, I probably learned a long time ago living in Boston and being around the people that I was around is at some point your brain pops, and I'm sure you guys did too, where that game is useless, right? There's always going to be someone who has more. I think it sounds naive, but sometimes it's nice to just flip it around and be like, you know what? I'm pretty darn lucky.
Yeah. That's where social media has created this this up and coming generation. They're chasing the next best thing. Every day it's the next best thing, and there'll always be a next best thing.
And they're getting good at it.
They are getting real good at it.
Really good.
Make it convenient to buy, it gets even easier, right?
I couldn't agree more. Well, speaking of expensive cars and staring at the roadways, why don't we check in with Kristen Snow in the Right Now Traffic Center? How you doing, Kristen? Welcome back to the Jon Sanchez Show here on News Talk 780 KOH. This is Jason Gaunt. I'm joined by Dwight Millard and Cory Edge. Today, the Dow closed lower by 398 points, or 0.80%, to 49,191. The S&P was lower by 13 points, 0.19%, to 69.63. The NASDAQ, it was down just 10 basis points, 24 points, 23,709. Gold did finish lower. It was higher by about 2% earlier in the day, but it did finish on the downside, 45.94, and oil did not finish on the downside. It was up 2.6%, 61.09. We were digging through some of the early conversations around one of my favorite reports, which is the Reno Sparks real estate market MLS report. Cory has some dynamite numbers, not only month over month, year over year, but what is it, like decade over decade? To compare some of the moves, or I guess the last decade, to compare some of the moves. So such a dynamite report. We should just jump right in. Tell us the state of the union, Cory. How's things going here?
Well, and again, just so everybody knows what we're dealing with, this is from the Multiple Listing Service. So kudos out to the Sierra Nevada Board of Realtors. They put out this data every month. I'm sure they'll send it to you. I'm happy to send it to you if anybody wants it. So this is Washoe County, specifically Reno Sparks, stick-built homes only. So I took out condos, all the other stuff. So what we usually do is we go month over month. So let's just start there. For December of 2025, median sales price 587 and change, 055. That's down 0.5% from November of 25, and that's down 2.9% from December of 24. So really not much there. It has held kind of steady, been up and down a little bit this year. But I've mentioned a couple times it had felt to me like, and probably a lot of people, the market had plateaued the last couple of years. Not the worst thing. It kind of hit a nice high level and then has just kind of been taking it easy and cruising along, not these big gyrations. And that's really what we saw in 25, a little bit of, movement from coming out of the holidays into spring through summer, the normal movement we see, but really nothing extravagant, nothing too crazy.
Real quick, stopping you there, Dwight, not to put you on the spot, but for someone who's putting down 20%, right, what does ballpark income need to be for a 7+100, to buy a $600,000 house, right? I mean, is it 200 grand a year? Is it 150 grand a year? Is it higher?
Well, I'm going to guess it's probably somewhere around 8,000 or 9,000 a month, depending on your debt load. Okay. But I'll validate that. It's you can see. I like Cory's analysis to it because he's absolutely correct. We hit a plateau, a really nice. Everybody that got in the game really benefited from this, but the plateau now has leveled off at a really nice level. To Cory's point. And that stability brings borrowers out, right? The up and down he's talking about leaves everybody at home, but we all saw it. We all now know it. And so I think, I'll send you guys a text that I saw today on that, what the opportunity cost was to not get into the market. But that is a fantastic, because that's why I think you're seeing encouraging numbers from the buyer side, is because with that uncertainty or knowing now, because people are going, oh, it's going to come down, it's going to go up, it's going to come. Now that it's just leveled, you're either getting in or you're not.
Yeah. And I was just trying to touch on it, affordability, right? And I know that you guys have talked about it a ton of times. And to me, just looking at a $600,000 house as average, right? Just knowing incomes and things, it's a high level to long-term sustain. Again, it continues there and we'll go higher. And all of the worry warts have been proven wrong over and over and over again. But I just wanted to jump in, just asking the question as to, it seems like a big number, as people have complained about the affordability, just continuing to escape them. And then moving on, the sales.
Cory, you hear us?
Yeah, do you see is it sales numbers, Cory, for you?
I'm sorry, I lost you there for 1 second.
I was just saying the next number you had there was the sales figures. Is that what's next? The number of closed sales?
Let's go. So we have 3 different reports here. I'll explain them as we go. So let's go across all 3 reports and stick to the sales price. So we did month over month, not much change from December to November, and from December 25 to December 24, 2.5%, not 3% change, nothing big. Now let's look at 2025 total and 2024 total. And remember, this is the median price. So this is the number right in the middle for both years. And it hit the exact same number, 585,000 year over year. And that to me goes back to that plateau. Not the worst thing. Buyers want to see it come a little lower. Sellers want to see it be a little bit higher. But nobody gets everything they want. And so, I totally agree with Dwight. When buyers don't have to panic like the market's getting away from them. Sellers don't have to panic like the market's dropping and they have to make these immediate decisions. Really, nothing really changed over the last 2 years, theoretically, with all else being equal. And if you can look at these reports, it's literally the exact same number. 585,000 was the median in 24. It's the median again in 25. No. So now the fun one. We'll stick to the same data. So we're just going to stick to median sales price. And this report goes back as far as 2016. So I pegged the needle to the left as far as it would go. I could go 17, 18, whatever we want to do. I just went, let's go back to 2016. So the median sales price for 2025 is up 91.2% versus the median sales price in 2016. There are some gyrations in there, as you can imagine. You had COVID, you had interest rates, you had kind of all these things. But as Dwight mentioned, and rightly so, if you would have just gotten in the game, if you could have, in 2016, 2017, and ridden through all the storms, you'd be much better off today. And that's probably true in your business too, Jason, if you just kind of forget the noise and let things do what they do and let the economy do what it does, and, love inflation as much as we like to hate it on some cases. It works for you. So 91% in the last, call it 9 years in that Reno market, which I thought was I've always quoted 100%, and I just kind of flippantly say it, but it's interesting to see it in print. That's a big number.
They doubled.
Yeah.
Absolutely.
Crazy.
There's a ton more data that we'll get into: closed sales, prices, overtime, square foot. But in lieu of time, why don't we jump in and check in with Jack Saban right now, who has news, traffic, and weather. How you doing, Jack? Welcome back to the Jon Sanchez Show here on News Talk 780 KOH. This is Jason Gaunt, joined by Dwight Millard and Cory Edge, going over the Reno Sparks real estate market report, both month over month, year over year, and like 8-9 years. Some pretty cool data in here. Real quick recap of the markets. The Dow was down 398 points today. The S&P was lower by 13 points. The NASDAQ was lower by 24 points. So we went over median home prices across that time set. Why don't we jump right in, Cory, to the next data point that you had there?
Yeah, so let's do closed sales. So again, Washoe County, Reno Sparks, stick-built homes. Closed sales for December 25, 381 units. To give you an idea, that's actually a decent increase, 26% increase from November of 25, which I would assume, Dwight, correct me if I'm wrong, we've had nice weather for December, and I think rates were heading downward. During that time, these contracts would have been signed in October-ish.
Right.
So that makes sense. So 26% jump over November, and it's actually 11% higher than December of 24. So this past December we just got out of was pretty strong for closed sales. If we look over 2024 versus 2025, the whole year, the stats for everything, we had closed sales for 25 of 4,498, so just shy of 4,500. And that's a 4.2% increase over 2024. again, these numbers are almost mirror images of each other, very steady, which is good. And I go back to what Dwight's saying is when the market kind of calms down and you don't have these crazy gyrations all over the place, people get they feel a little better about it, like they're not going to buy something that's immediately going to go down in value and have to worry about it. So,
and that's a massive fear. I feel like buyers, like anything, it's simple to say I don't want to buy something and have it go down, but I think with this, it feels to me when people say that around a house, it's different than the way they feel about a portfolio of some kind where, yeah, they're mad or sad that it went down. But sometimes with a house, I almost feel like people feel like they feel dumb, like, I should have waited and da-da-da-da-da. And, because it's such a big purchase. You probably perseverated over it for, again, Dwight sent us a text that showed clearly buying at any point in the past was right. But, you perseverate over it because you're thinking, oh, this is going to happen or that. You make the jump and then prices go down and you just get this like near-term regret function. So yeah, it's such an interesting dynamic psychologically.
Yeah, and I think it's the Zillow and the different mechanics of trying to figure out pricing now. And I don't know, maybe we're far enough away from it. I know the three of us remember for sure. But the things that happened in 2007 and 8 and 9, to people that lived through it are still fresh in their memory.
Yeah.
And nobody wants to go through that again.
No.
And so I think there's still some of that. And even now there's, you have some people that are first-time buyers or were kids living through that. So maybe they weren't making the mortgage payment, but they remember mom and dad struggling and mom and dad having stress about it. So I totally agree with you that it's people trying to time certain things, but you can't. You just get in it and, go for a ride and have a long-term view.
Right. And again, aside from, and some of it is because of job changes, you're not Zillow trading your house, right? Like you can look at your stock you buy or whatever ETF you buy and see it every day and it goes up and you could sell it. But you're not day trading your house. Like you need to think of it that way too.
Yeah.
That yes, if the price goes down, your payment didn't change. Your payment didn't go up, right? It's still, you went in, you have a payment, your cash flow is what it is. Stop looking at Zillow.
Yeah.
It's almost turn it off. Like,
but over the years, Cory, that's what Cory's talked about. If you're trying to create a household or a home. You're not trying to create an investment. It just kind of works out that way if you are responsible and do what you're supposed to. But I mean, everybody needs some shelter, and that's if your mindset is changed. I think you'd see more and more people even diving into the game right now.
So let's look at that same thing, closed sales, but we're going to look at 2025 versus 2016. So again, 1,498 closed sales in 2025, 29% lower than it was in 2016.
Way more than fast.
Yeah, and I don't have the exact number. The report doesn't tell me what that number was, but that is the crux of what we've talked about for the past 2 or 3 years is that we don't have the inventory to supply all the buyers that want to buy houses. And that report, that number points directly at it, that you have 30% fewer sales last year than you did 9 years previous to that.
Yeah, it looks like about 1,300, 1,400 more sales back in 2016 than now.
Yeah, and that would make sense.
Yeah.
Go ahead, Dwight.
No, I was going to say I did it. It's 3144, so you're absolutely right. It's about 1,300. I mean, that's 100 a month.
It's real.
Yeah, exactly. So, and that's it. And we'll see those start coming back. And when that comes back, if it does, then that'll be back to the balanced market. But
yeah, and the population hasn't shrunk. Right.
No,
so
exactly.
It'll be back.
You have more coming. Median days to contract. So what this is, the day you sell your house and you put it on our MLS is day one. The day it goes pending is what the MLS considers days to contract. So how long, when you put it on, is it taking you to get a deal? In the month of in the month of December for 2025, it took 40 days to get to that point. Now remember, November, December, those are slower months typically.
Mm-hmm.
It took 40 days. That's 14% higher than it took in November of 25, but that's 21% lower than it took in December of 24. And so what that means is December of 24 was super slow, and at least even though it felt a little bit slower this year, it wasn't nearly as slow as it was a year ago in December. If we look at 25 versus 24 all year data, it took 26 days was the median number in 2025 versus 19 days in 2024. So it took almost 37% more time in 2025 to get your house sold than it did the year previous to that.
Corey, is
and
that
again,
a good indicator of the market stabilizing or plateauing, to your point? Is that?
I think it's normality coming back to the market.
Sure.
I mean,
I'll waive
I don't kn-
everything. Just let me buy this
Exactly.
house.
Yeah.
exactly. I think it's everything kind of equilibrium again. Buyers don't feel panicked anymore. Sellers don't feel panicked anymore. It typically, we've gotten so used to things put the house on the market, have 5 offers day one. Like, that's not a normal market. You're going to get back to whatever a normal market is.
Right. You've seen enough gyration. Who knows what that even is?
Yeah, and so if we look at this, number's not as dramatic, but median days again to go to contract 26 days in 2025. In 2016, that's 18% more than it took in 2016. So not a huge number. Everything's about steady for where we were back then. So interesting data, but the price is way up, obviously.
Yeah, for sure.
Let's do, if we have time, Jason, we'll do median price per square foot.
I like that.
In December 2025, median price per square foot, $325 a foot. That's up 1% over November. It's up less than 1% from December of 2024. So that one's kind of held steady through all these reports. It's up 1.3% if you look at all of 25 versus all of 24. So again, nothing drastic change. This one will get you. Median price per square foot, December of 25, $321 a foot. That's up 87.7% from 2016.
Wow.
So that's your inflation. That's your cost. That's everything in there. And that is, it just goes to show some of these sellers, they're not pricing things because they have to. They're pricing things because that's what it costs to build. These builders, a lot of people think, and Dwight, correct me if I'm wrong, a lot of people think builders sell houses and they make a ton of money per house. And Dwight and John and I kind of did the math, I don't know, a couple weeks ago during the show, one of the breaks. They were making, what did we average out? Like $2,000 or $3,000 a house.
Yeah.
For D.R. Horton.
Yeah. The margins were as low as you can get them without
Exactly.
losing money. Yeah. Well, I know there are builders out there that are close to writing a check to close an inventory home that's been sitting. So to Corey's point, Corey, and I don't know, do you see any relief coming around the corner for any of these builders? It feels like the supply chain and all that weird stuff we went through, is it ever going to come back down?
Well, that's a Jason question, but has it ever come back down? Like, I guess they're commodities, so they could, but.
Yeah, Jason?
And a lot of the home builders changed how they did business, right? They were in the whole from land acquisition to tearing the sticker off the house at the end. And they've done a much better job now of sort of fragmenting that business intentionally where they don't have the land risk like they used to. They've offloaded a lot of that land risk and they're doing more the, building and or eventually financing creatively with some of these properties. So it's not like they're in a tough spot. If maybe their current build goes sideways, sure, they could have an issue, but not, land in general going through a big downtrend that all of a sudden they own all this stuff and they're in a tough spot. So they've really revamped their business a heck of a lot in the positive side. So I would say they're better protected from a downturn because they are, not that they're asset light, but they're much more asset light than they used to be for sure. But, private credit and some of those other funds that own these assets that sell them to these guys could be in a tougher spot. And that's one of the reasons why, internally we sort of steer clear from that sector. While those rates may look good on private credit side for a period of time, when the water goes out and you own all these assets you can't sell, they don't tend to work out all that well. But for another show. We got a great stat that I'm excited to see after the break, but why don't we wrap it up with Kristen Snow in the Right Now Traffic Center. Welcome back to the Jon Sanchez Show here on News Talk 780 KOH. This is Jason Gaunt. I'm joined by Cory Edge of Edge Realty and my good friend Dwight Millard. We were going through the Reno Sparks real estate, and this thing does not roll off my tongue, MLS report. This is one of my favorite shows. I love seeing all the stats, and we were covering month over month, year over year, even going back to 2016. And I think this last one is really lines up with everything that we've been talking about for a while, is the new listings number. And I'd love for you to go through those and we'll kind of talk from there.
Sure. Yeah. So December 2025 new listings, 232 new listings came on the market. That's roughly 24% lower than November of 2025. That's not crazy surprising, because who's going to put their house on the market in December? I mean, there's just so much going on. So that one's interesting. It's a big percentage drop, but not unheard of. It's a 5.5% increase from December of 24. So pretty similar. December's, you're kind of at the crux of that holiday thing. So nothing crazy. If we look at 2025 versus 2024, full market, full year, up 27%. So this is new listings, up 27%. I'm sorry, 2.7% in 2025 over 2024. So again, these year-over-year numbers are just mirror
It looks like the same year
to each other. You wouldn't even know for most of these. Like, as you mentioned, that was a different report. So very similar to each other. But here's the crux, and this is probably what you're mentioning, Jason. Again, 5,458 new listings for the whole year of 2025. That's a 30% decrease from 2016. And that goes straight to the point of I don't want to say there's no inventory, but it's a massive decrease in inventory, which leads to higher prices, or has led to higher prices, amongst other things. Right?
Sure.
Costs, inflation, the rest of the stuff. But lack of inventory is what's been propping this market up for most of the time, and it stayed pretty true to that fact for 2025.
Cory, touch on that if we got time. Touch on that month inventory. I see now we're below the 2-month again.
So just specifically to 2025, in December of 2025, we had 714 active units. That's an 18% drop from November. The month's supply was 1.9. That's a 35% drop from November. The thing I did not include in all these, and this is happening across the country, is they have different names for it. I call it cancel listings, but houses that were on the market that didn't sell that people are taking off. Either expired, canceled, whatever. They're saying, hey, I didn't get the price I want, so just take it off the market. That kind of escapes some of these numbers, but that number, not only locally, but across the country, is rising, where sellers are getting flustered and they're saying, if you won't pay my price, then I'm staying right where I'm at.
Yeah, and I bet it's the higher priced houses too, right? It's probably not the median ones, or is it all?
No, it's all of them, because some of these median price houses, and this is a weird thing when you get into these plateau markets, somebody who bought 2.5, 3 years ago can only get now what they would have paid for it.
Interesting. Yeah, it's exciting, and I love these numbers. So thanks. I know the listeners love when you bring them over too. Well, thank you guys very much. Thanks for listening. This is the Jon Sanchez Show, News Talk 780, KOH.
Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited, an equal housing lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.